housing supply numbers are really, really poor at the moment. You're wrong. You're wrong.
Like from a property investor level, I don't know. I would just be dartboarding anything in Brisbane now.
What on earth is going to happen to my property investment, my home?
I would say more significant falls than I would expect.
"2025 property predictions, state by state, city by city." We have one of the most exciting episodes, what everyone wants to know. What on earth is going to happen to my property investment, my home? What city is going to do best? Why is it going to do best? We're going to go through it all, state by state. Curtis, let's get through this. How are you, man?
Pretty good. Let's hit the numbers.
All right, let's just get straight into it.
Yeah.
Okay. We're using SQM research here and Louis Christopher's amazing report that he released a couple months ago here. But we're just going to shoot the breeze a little bit and talk through state by state what's going to happen this year. Baked into these numbers is, 1 or 2 rate cuts that happen this year. Population growth continues as expected, and there's nothing unusual that happens. We just expect the year as planned and no big...
Relatively boring year.
A boring year.
From the economic front, yes.
Yeah, like last year.
Yeah.
And we just did a podcast that we've just released with what we expect for the year and the economy. We did that intentionally. On that podcast, you can see exactly what we expect for the year. If that happens, then we expect these things to happen to property prices. Just laying that out for everyone. Property prices are a function of what is happening in the economy and specifically in the local economies of those areas and the broader Australian economy. And if something really unexpected happens, then all these numbers will change and everyone will be wrong. So that's why we need to take some assumptions that there'll be a couple rate cuts and population grows at this much and things remain calm. If those things happen, we can kind of get close enough to making some crystal ball-y predictions, which will mostly be wrong, but some will be right.
It gives you, I'd say, it gives people a base case to start their thinking and analysis from.
Yes.
It's not the answer, but it's like if you're a property investor and you're like, am I looking to buy? What do I think is going to happen with my portfolio over the next 12 months? You're like, okay, here's my starting point that I can ground myself in, and then
for sure.
I will tweak the numbers with my own personal views on top of that.
For sure. Exactly. Let's start. Perth. Perth is going to rocket. Plus 15 to 20% increase in house prices this year. Wow, another year. That would be 100% year on, 100% total return. Perth property prices doubled in about 4.5-5 years if this happens.
Continuing to be basically the hottest market in Australia. Also, I think what's interesting is they've broken down some numbers if we go for a slightly softer set of economic assumptions or a slightly more aggressive set of economic assumptions.
Yep.
Even under some soft numbers, still looking at 7 to 11% is the range they've got. Property price growth in Perth, which is leading the pack.
What do you think though? Yeah, anyone could read this. Well, we want to know what Curtis thinks. Just shoot the breeze a little bit and tell me, what do you think is going to happen to Perth property prices here? Is this undercooked, overcooked, or spot on? And why?
Why? That makes it harder. It's easy to just pick one and be like, I think
I'm throwing him under a bus here, everyone. Yes. I've given him 3 seconds to think about this, and
personally,
I'm have an opinion.
Yeah, I'd have to look at the supply numbers in a bit more detail. My gut feel is I feel like it's a little overcooked. So I feel like it's a little ambitious for Perth. I don't think Perth is going to go backwards, but I feel like 14 to 19% growth, given what's happened previously, that's a very, very strong prediction. I would personally be more comfortable forecasting something a little bit lower if I had a Perth portfolio. I don't know. I'd just whack times by 1.19 on my spreadsheet and be like, boom. I think I'd be picking
made hundreds of thousands of dollars. Yeah.
I think I'd be picking a lower multiple. I have concerns about affordability constraints there, but I would have to really, really, really dig into the supply side to see how badly supply constrained is it. Because I feel like you would need a very, very significant ongoing supply and demand mismatch that is not going to be solved. And if anything, is probably going to worsen from where it was last year in order to hit these numbers. So my gut feel is a little a little more ambitious than the multiple I would have expected.
Okay, everyone, if you're listening to this, drop it in the comments below. You could just say, Curtis, you're wrong. You're wrong. Perth's going to do better than this. Go for it. Go for your lives and put it in there if that's what you think. I'd love to know what you all think about that sort of prediction. Plus 15 to 20% in that sort of bandwidth as to property price growth. Curtis thinks that's a little bit ambitious.
Yep.
I want to disagree with Curtis, but I kind of agree with him here. And I think it's probably on the high side. But, rate cuts could really fuel a little bit more momentum. It can change behavior a little bit. So you got to make some read the winds sort of crystal balling around here as to how does that change. I think it's still going to be an exceptionally strong performer, at least in the first half of this year. But behind this is the words, it could turn on a dime.
Yes.
And Louis Christopher says that when it comes to its economy being as diversified as it is today, it is still very, very dependent on what happens in international markets and specifically the mining sector. And it has much more volatility attached to it from that. So it could turn on a dime is the words that he uses. Yep. And that could mean that it goes from plus 15 to 20% to, next to nothing as well if it does go badly at some point later in the year. And we're talking about some global factors here.
Yeah. And these are the kind of the macro numbers. But like if I think about this, not just from a macro analysis, but as a property investor, my kind of view on Perth at the moment is I feel given the growth it's had, I don't think it's a place that I would be comfortable you can literally dartboard it and you could throw a dart and hit any house and buy it and it's going to be an amazing investment for you. Maybe 12 months ago, that was the position.
Yes.
You could buy anything there and it's going to go great.
Yes.
I think as a property investor in Perth now, can be a good investment, but I feel like you want to be buying a quality property. You want to be trying to find something you're not overpaying 10% on just to get the deal done. Yep. Whereas a year ago, whatever, just take it, get in. Like the tide is rising so far, any kind of boat will do. Yep. Now I feel like you have to be a little bit more careful about the circumstances in which you enter because it's not just a matter of getting anything and you're going to be swimming in a massive equity uplift.
Yep, I think that's a fair summary. You got to be a bit more cautious because of where it is in the property cycle.
Yes.
And maybe with Perth as well, you got to be a little bit more cautious because of its history with cycles. It has, after a really boom period, it has typically done quite poorly for a period of time. And it's just prone to other cyclical factors. So if you're buying high, then you don't want to be in a position where you're buying and you have to sell in a year or two, and in case there's a change in circumstances. So Perth going to be the number one city according to this year. I think he's probably, I'm not sure he's right about that, but he's probably close to that, especially in the first half of this year as well.
Yeah.
One of the pro points for Perth is it's got a 4.2% yield on its city, and Adelaide, Brisbane, Melbourne, Sydney have lower yields. So may have a little bit more price appreciation to go because its relative yield is stronger, which sort of suggests it hasn't hit its investor affordability cap.
Yeah.
Investors are willing to drive up the price a little bit more because
push the yield down a little bit to that kind of equilibrium. Yeah,
exactly. So I think this, once you have plus 19% though, then you're back at that 3.5 to 3.7% yield the other states have. All right, let's go into city number 2, Brisbane. Brisbane. What do you think, Kurt?
Okay, well, I think so. This one, the base kind of case is growing, the second best performer basically in the country. 9 to 14% as kind of the growth range.
Yep.
I feel like this one may be marginally high as well, but I'm a fair bit more comfortable with this number, with this set of numbers than the Perth ones. I feel like it's a little bit more achievable. I feel like Brisbane is still growing. And to some extent, I maybe have some of the same concerns as Perth. Like from a property investor level, I don't know, I would just be dartboarding anything in Brisbane now because it has had very strong growth previously. And if, like I say, if you overpay and you give up 6-7% on the way in, then your growth beyond 2025 and how that looks is a little bit more uncertain. But I have a little bit higher confidence level in the Brisbane numbers just because they're not quite as ambitious as what he's listed for Perth.
Yes. Brisbane's really, really interesting because its economy is doing really, really well.
Yes.
It's got a general housing shortfall that is across the country. But the reason why it's so interesting is it's at its lowest yield level it's ever been.
Yeah.
Plus, its rents have stopped growing. Even in this very report, it's got negative rental growth. Its yield is as low as it's ever been. And yet prices can rise another 10%. When you throw in that combination, Brisbane is going to be nearly as unaffordable as Sydney is in terms of rapidly high house prices.
Yeah.
Like really, if this is true, it's got ridiculously high house prices now, which was really a lot of the lure for all that interstate migration that would go up to Brisbane, Sydney-siders, Melbourneites that would go up there. That's over. Like, they're not going over for house prices anymore. Like, that will change if these predictions hold true. But at the same time, it's creating lots of jobs.
Yeah,
and,
that's where I feel like that scenario could be true, that Brisbane the economic conditions in Brisbane might stack up for it to be a relatively unaffordable city compared to other capitals.
Yes. It's already there, to be honest.
Yeah.
But yeah, it's already there and it's going to get worse. That's what this prediction says. Okay, so interesting thought process there. I also think probably a little bit ambitious, a little bit aggressive on price growth here.
Yeah.
I think there's probably a general theme here. I think I'm probably going to find that growth rates may be a little bit slower, but he is baking in 2 or 3 rate cuts here. And I guess once you feed in those rate cuts, it just triggers the momentum wave. And I think a lot of this is the prediction of how much of a momentum wave will this cause. There's a bigger picture narrative that is happening as well. So housing supply numbers are really, really poor at the moment, but they're all on the rise.
Yes.
The beginning lead indicators are on the rise. So if these rate cuts get delayed another 6 months, we could be at the point where housing supply numbers are getting stronger picking up, and actual deliveries are picking up enough that when the demand rise comes, that it's going to be matched with a corresponding supply increase. So rate cuts won't actually trigger any changes in prices. It's just going to soak up that additional housing supply. So there is that potential conversation around the grounds as well. Next up, we have
your favorite.
Yeah, I wouldn't call it my favorite. It's the interesting one. This is my theory. I call it my theory.
I'm expecting some kind of like ambassadorship or something that you're going to get bestowed on you. You're a big cheerleader.
Yeah, I don't mean to be a cheerleader. So anyone watching, I don't own property in Darwin. Never owned property in Darwin. And if I do buy property in Darwin, I'll let you know. I'll make a very public disclosure. I bought a property in Darwin. But
for a guy that's never been there, you got a lot of love for it.
Yeah. It's all cyclical demand. We're talking about Darwin because it's all in the context of this data-driven buyer's agent craze, where I can just predict where they're going next.
Yeah.
I know they're already there from all of our on-the-ground research. And basically, we're going through state by state. And when you do this, you just work out, hey, I'm a buyer's agent that's got to buy 80 properties a month. Oh, crap. I can't buy in Perth anymore because I've told all my clients I'd buy a 5% plus yield. Gone. Yep. Adelaide, gone.
Townsville.
Oh, no, you can keep Townsville. You can keep...
no properties for sale if you got a lot of customers.
Yes. We'll go through them state by state, capital by capital. So Sydney, never. Melbourne, starting to get back on there. And yeah, I can sell Melbourne. Yeah, I think that one gets into it and has a lot of legs. So we'll talk about that a little bit more. There's limited options right now. And if you want a 6% yield and you want a nice house and you want an unemployment rate, that's an unemployment story, that's amazing. You want really, really strong yields and you want you want like a
if you want to invest on a spreadsheet.
Yeah, you want to invest on a spreadsheet. And that's what everyone's doing. They're investing on a spreadsheet. On a spreadsheet, Darwin looks amazing. And we represent so many clients that just really watch a TikTok video and then just follow the other person watching another TikTok video, and everyone's repeating the same TikTok video, where it's just like, cool, 100 people said it to me, but it's like one guy off one TikTok video, and then 100 people have copied that TikTok video and presented it as their own. It's just the modern world we live in, and the modern world we live in suggests that everyone's going to Darwin. And I'm just telling everyone before everyone goes there, I think it might be too late a little bit from our contract of sales and our conversations that we have had. We've typically never seen a Darwin contract of sale, but we're seeing more and more conversations about it. More and more, people send me properties of Darwin. I think it's going to have a much better year than any of these predictions. What has he got here?
5 to 8.
5 to 8. Double it. I'm going to be wild, triple it. That is what I think is going to happen to Darwin. I think Darwin will triple it. And I'm going even further. I think I am wrong. I think I'm wrong in that. I think it's going to be, I'm undercooking it when I say it's going to be 15 to 24%. I think Darwin is going to shoot its lights out and have its highest quarter-on-quarter growth. It might even be right now because everyone is there right now. And when you have 50 people just rock up to Darwin in one point where there's 1,000 properties for sale and 50 of them just rock up being like, I'll take 2, I'll take 3. The whole dynamic completely changes because it's a small, tiny market. So I think Darwin is probably going to have 25% plus growth rates purely off investors, like crazy. So
speculation.
Yeah, speculation. Yeah. I'm not saying to go and speculate there. That is clearly not what I am saying. I'm saying that other people are speculating off TikTok videos and buyer's agents are going to go there. And that's just the modern economy we live in at the moment. So yeah, Darwin's going to benefit
respond to information. Yeah. I think, I don't think it's going to hit 25%, but that is you're not predicting what everyone else is predicting there. So I give you a little bit of credit to be like, all right, you are going out on a limb. Yes. But I do think Darwin will, of the capitals that we've got in this table here that we're working through, I would expect that Darwin is going to be the number one on that list. I don't know that it'll get that high, but I don't think it will be number 3 like it's placed here behind Perth and Brisbane. I feel like it will. You are right in saying that it will be the one that performs better than people are expecting.
Yes.
How much? That's you haven't quite sold me on that, but better than people are expecting. Yes.
Man, I'm trying to get the daily index. I'm on my screen. Anyone on the computer here? I'm trying to get the daily house price change. Like you can get a daily index from CoreLogic, but like Darwin's too small to even have its own line item. So that's a little bit harsh, CoreLogic. There's a lot of Darwinites out there. They want to know what's happening to house prices every single day, okay? But what we have here, giving you some level of insight. So you have a year where house prices did not rise at all, but a month-on-month rise of 0.4%. So what's that? 5% if you extrapolate that increase in house price rise. Houses, 0.5%. I think you'll see it in houses. So what's that? Is that 6%? 6%. Cool. So we are probably already at the decade high pace of house price growth in Darwin already. I'm saying that number is about to double, about to triple. It's going to go bonanzas in price growth very, very quickly. The reason why I know that is because my phone, I have conversations with people. They're like, I'm trying to buy in Darwin, but like, it's supposed to be easy, but like, I just got gazumped by 50 grand. And then I also speak to Darwin locals who are just like, what? No one's ever bought a property here in 10 years. What's going on? Why can't I buy property investment? So, I'm just feeding in that like live on the ground sort of conversations that we have. So that's why I think all these data metrics are so low. And Darwin's so small. Maybe not like geographically, but we're talking about a very small property market that a few Sydney-siders rocking up and buying some property. And
makes a difference.
Yeah, major buyers agents, like, major ones. So we're talking about some of the biggest ones going in there and being like, I'll buy anything in this city that ticks these 3 boxes. Just throw it at me, give it at me. Being like, they're just so large that when they go to a place like Darwin, it's just like, wow, one person can actually move the entire market. That's what's happening at the moment. So the data itself is that. And then, I've seen this so many times before, the momentum that causes, and then everyone has that FOMO, I want a piece, I want a piece, I want a piece. And then everyone's like, go look at a chart. When a place hasn't grown yet, it must be about to go really, really fast. There's 1 or 2 people that will look at some 30-year data charts and then say it, and then everyone follows it, then follows a TikTok video. Like that, it's just
self-fulfilling prophecy.
It's self-fulfilling. It's this crazy, it's GameStop of property. That's why I think that's going to happen. It's gotten nothing to do with the realities. And the reason why we have such a big difference in our prediction is because I am studying human behavior rather than the data and
the numbers that underpin it. Yeah,
exactly. Human behavior is going to drive that. What's up next?
All right, the 2 big boys, Melbourne and Sydney.
Ooh, Melbourne and Sydney. I think pretty boring years for both of them, to be honest. What do you think?
Well, the predictions here, the base case is like -1 to -5. So
really?
Predicting, I would say more significant falls than I would expect. I don't know that I would even necessarily expect a fall in Melbourne or Sydney. It's a bit anecdotal, but my gut feel is that as rates come down, I kind of find it hard to believe that those markets are going to go backwards in an environment of falling rates and higher borrowing powers. I just kind of feel that there's a little bit of there is always some pent-up owner-occupied demand in these big cities like Melbourne and Sydney. And as people's borrowing power and ability to upgrade comes online, I just feel like there's a pretty one-to-one shift into demand for housing. So if there were no rate cuts, then yes, like 5% fall, 1% a small fall, I can kind of see. But I feel like as rates come down, that would level out and you will see no growth or you'll start to see positive signs. Sydney, those positive signs I feel like have far less upside given the affordability constraints. Melbourne, I think once it starts to go positives and are those green shoots, I feel like that might be the start of something much, much bigger for Melbourne.
Yeah, I like that summary. I think this is probably a touch aggressive, but only a touch.
As in pessimistic, right?
Probably a touch. But I think he's right for the first 6 months of the year.
Yeah, if you budget like that's before the rate cuts come,
yes.
That you might have an annualized number,
Yeah, but -1% to -5%, that is pretty modest. It's like a very, very small, like especially if you're at the lower end of that band range, it's like house prices stay the same. Like -1%, that's nothing. House prices aren't growing, basically. -5%, that starts becoming material. So it depends where he sits. I'm going to go further. I think he's going to be right. Like I would prefer a bandwidth to say is 1% to -3%. Like that's how I'd probably put it.
Yeah.
But basically my summary is not much is going to happen. I think he's right on Sydney. I think he's wrong on Melbourne. I think Melbourne will do a little bit better than Sydney because of that investor mentality coming in. And I think it's going to be lower price properties in Melbourne. So anything sub 750. There's just so many people nowadays. So many people are out there being like, I want to buy in Melbourne. So many Sydney-siders. A lot of people are wanting to sell out of Melbourne. So it's being offset around a little bit. But rate cuts should fuel more investor activity and more owner-occupier activity in Melbourne. But I don't think it's got conditions for big rises this year.
No, I think that's the 2026 story, potentially for Melbourne. I don't know about Sydney, but...
there's just a supply side story on Melbourne, which makes it a little bit trickier. There's a lot of supply. I trust them with their supply delivery, the execution of that delivery. And I trust them more than all the other states because they have historical performance of actually getting it done. Their planning system actually gets shovels in the ground and builds homes. So I think even the upside might be contained a little bit, but from additions in supply. But overall, I think it's just going to be a pretty boring year in Melbourne, probably 0 to 5%, and in Sydney, not much, with a decline period for Q1 to begin with. I think Sydney will post a negative quarter this quarter, driven by the higher priced segments.
I think that could be true. I think across the year, though, I'd expect it to be closer to just flat as opposed to going backwards 5%.
Yes. I think Sydney will, if I had to guess, Sydney will post a negative year and Melbourne will post a positive year. That's probably my summary. Very, very marginal, the difference between the two, though. And Melbourne will outperform Sydney by 3 or 4 percentage points, though. So it will have a better year. We'll look at results and think Melbourne has outdone Sydney this year, while I think last year it was the reverse. And right now it is the reverse as well. I think Melbourne is slowing down faster than Sydney.
Correct.
But over the course of the year, that could change. Okay, let's get on to Adelaide. Wow, +8 to +13%, on fire.
Yeah, so sorry when I said Darwin, this is actually the one that has the third highest growth predictions. My personal feel is I feel like this is a little aggressive too. I haven't. My research on Adelaide is pre-honeymoon, so forgive me. It's not. It's not as stuck in my memory. But last time I looked at all the employment numbers and the economic performance of Adelaide, I do recall having some concerns about that. That the South Australia performance in general
its employment growth is weak.
Its employment growth is weak. So I feel like I would be a little more nervous on a +8 to +13, really, really strong year of Adelaide growth.
You know what? I think this is a really interesting one. I think Adelaide growth is if you think about it, house prices grow when people buy properties there. House prices grow fast when investors start buying properties there and really want properties that were no longer there because they move flighty, they move around.
Yeah.
And it's just a huge addition that comes in, especially in some of the smaller
Yeah,
capitals.
they're the one that, like speculative demand that picks up and goes from one area to another.
Yes. I think the speculative Adelaide demand
Is out, right? It's moving away.
it's going to Darwin.
Yes.
That's what I'm saying. I'm saying that Adelaide should have house prices grow because it's got the biggest housing mismatch between supply and demand.
Yes.
So that should probably mean house prices continue to grow.
Yeah.
But got a 3.6% yield at the moment.
Yes.
It's the most unaffordable city that it's ever been. It's like one of the most unaffordable cities in the world. It does have a pretty strong foundational economy though. Like right now, its employment growth might not be the strong, but its economy, it's changed a lot and it is a much healthier one with good long-term prospects. So I think it will be a more of a modest year there than that. I think it's a year where Adelaide house prices, the growth trajectory comes down a lot.
Yes.
So it'll be an inflection point on a curve, which may have already started, but an inflection point on a curve. But I do still see it growing fairly materially. So a little bit less, probably much less than he's predicting. But that I think is going to be lower than what he's predicting. Probably he's got +8 to +13% here. I think we're probably talking, +4 to +7 or +8.
Yeah.
Something like that.
I think, to be honest, the way you described it, because he's got Darwin at +5 to +8, if you were to just say, hey, all the property momentum is coming out of Adelaide and going into Darwin, and you were to reverse those predictions, even though you said 25 for Darwin, I feel like...
Darwin's much smaller, so if you have... if you have 100 Adelaide investors, 100
it skews the numbers more than investing in Adelaide, yes.
Actually, I'll put it this simply. If you have 100 Sydney property investors, 100 people, that's like, 2 months of our clients, if that makes sense. They all just, this isn't that many people.
Decide to buy in Darwin.
They all decide to buy in Darwin. Darwin house prices will rise by more than 25%. It's the soak up has gone. So there's been a soak up. Whenever a house price boom happens, there's an initial period of soak up where it's just like, you got to take away all those old listings. You got to start buying all that excess stock that was there. Now it's like, there is no more excess stock. So if you want my property, you got to pay up.
Yeah.
Pay up, everyone. So I think we're at that point. So these 100 people, a very, very small number, if they go there, that's how you get the 25%. That's why I think I'm undercooking it as well, because I think it could be like, it's like Townsville-esque, where it's just like, what happened here? It's just because it's a really small market and 100 people decided to go buy there. And then it's like, whoa, house prices are on fire. I can see that happening to Darwin. Okay, so we've got Hobart and Canberra. Let's do these two together.
Yeah.
I got a really interesting thing about these two.
Tell me. Tell us. That's what you're here for. Correct.
Yeah, I just pause here. Sorry. The rental stories on these have had a complete change in their trajectory. They're leading the rental growth charts now out of nowhere. You're a Canberra owner.
Yes.
You notice your rent just magically go up last week?
Hang on. Should I actually check that?
Yeah, check your rental statement.
I don't think it's gone up.
Your property manager called.
I don't think it's gone up, but
hey, my data set's saying that rents are going up here.
Yes, I have noticed it like in the last I think the last time it got renewed, so like the last 6 months compared to what it's been doing for the last maybe 4 years. Yes, it had a pretty big uptick compared to what it did over the last, like I say, 4-year window.
Yes.
Where it did not that much.
Big increase in rental pressures in Canberra. I think Canberra, again, might be dependent about
election year. Yeah. Always makes a massive difference in Canberra.
Yep. So maybe there's more activity happening. Maybe there's more short-term activity, contractors and things like that to help build that up.
Yeah. Canberra, you can't predict until the election is decided because again, population change in Canberra, the size of the public service and what each government will plan to do makes a massive difference to the Canberra housing market. So
yes, I think Hobart will do better as well. I think Hobart might be doing a little bit better than everyone expects as well. I think it might be starting its next little. This time is different. It's not going to rise nearly as much because it's already had its growth run and now it's plateaued off and had a couple poor negative years. But I think Hobart could be more interesting than people think. Don't really know why yet. I'm just saying that because it's some soft level research here in terms of its rental market and some soft momentum change as well and a few conversations with clients as well. I think he's got -3 to +2. I think he might be off on that as well. Wow, I'm disagreeing with him a lot on this one. I didn't mean to because he's such a smart man. But
Well, he could be right and we could be wrong. So,
Yes.
we could look back on this being like, that was silly to disagree.
yes, but I think so. Summarizing it here, Perth, I don't think it's going to do quite as well, and a little bit riskier because it's risen so much and it's downward nature. Brisbane, flying economy, doing really, really well, but the most unaffordable it has ever been. Darwin, we think is going to fly, no for any other real reason other than a bunch of property investors are going to rock up there. Melbourne, going to do better than people expect because investors are
Starting
flocking
to head there? Yep.
And its affordability will improve a lot when rates come down, and the fact that it has barely risen in the last 4 or 5 years. Sydney, going to do not much at all this year. A pretty boring year in Sydney. It just needs a couple of years of flatlining, and where last year was flatlining and this year's going to be flatlining as well. Doesn't mean there's not opportunities in Sydney, but it's not
Opportunities everywhere.
just not a general one.
Yep.
Adelaide maybe doing a little, will have an inflection point, will slow down. Hobart to do a little bit better than expected than people think. And
Canberra, we'll talk to you in May.
we'll talk to you in May. That's our summary of the property market in 2024. Kurt, anything you want to add to our assessment there?
No, I think we've covered it all. And this is all subject to be updated in the, coming days, weeks, months. So no doubt we'll probably have a revised version of this in a short period of time with some different numbers. So I think it's a pretty good early January, mid-January rundown of what it could be.
We can't wait, everyone. And everyone, you're going to start seeing a mix of episodes on this podcast. You're going to see Adi Chanda on this a lot more with me, going through deep dives of suburbs. You asked for it, so we're delivering it. That's what we want to see. That's what you want to hear. So we're going to go and do that on our next episode, and more coming out soon.